All right, Craig, we got to dig into this. So the reputation economy is worth about $7 trillion. You say for a company outside of its regular operations, it can increase shareholder returns by almost 5% every year. Let's start off with this. What's the methodology? How'd you come up with this number? How are you coming up with this data?
Yeah, great question, and thanks for that as the opening move here. So really what you do is you look at, there's a generally accepted financial model for companies' expected returns. That then begs the question, what is the unexpected returns? And so what we did with our partners at University of Oxford is we separated the expected returns from a company's financial valuation from the unexpected returns. And then they did a regression analysis to separate the dependent and independent variables within that. And we were able to isolate reputation as a driver of about 5% of these unexpected returns. And when you take that figure against the total market capitalization of the 100,000+ publicly traded companies across every exchange in the world, you get to $7 trillion as an opportunity space.
Okay, I want to hit another number because I got to be honest, this is a very wide range. You say this is going from a soft asset to a hard asset when we're talking about the reputation economy, and it can add to a business anywhere from $2 million to as much as $202 billion. Now, if this was a company giving guidance, that would be incredible range. Are there certain sectors where reputation helps more than others? Are there certain types of businesses? If you're consumer facing, does reputation matter more than if you're B2B?
Yeah, so that range that you hit on there really is indexed to what the market capitalization of any individual company is. So whether that's 2 million or in the billions is based on how much the market capitalization is. We looked at companies across almost every sector. We looked at aerospace, we looked at financial services, we looked at consumer products, we looked at retail. So a really robust data set, which is why we're so excited to talk about this time as something that has moved from what is historically considered an intangible or tucked under goodwill in a balance sheet to something that we can actually quantify and measure. And there's 8 different things across the reputation spectrum, each of which matter in different ways to different companies in different sectors.
Okay, Craig, you brought up market cap, and I do have to ask you, the $7 trillion, we did a little math here at CNBC, that $7 trillion is bigger than the market cap of Meta, Alphabet, and Tesla. This is a huge number. In all fairness as well, I think we just got to put this out. You're also in the reputation business, basically, with public relations and public affairs and helping companies with their public image. Isn't this a bit like a shoe salesman saying you need a shoe?
Well, it could be, but for the fact that we brought a lot of rigor to this and we partnered with the University of Oxford on it. And before I move past your first point on market cap, this is looking at an entire universe of 148 trillion of market cap across every publicly traded company, across every exchange in the world. So yes, that 7 trillion is a big number, but it's only about 5% as held against the total market cap of every company out there. So the math reconciles on that. And yes, the industry has historically been evolving in how we think about measuring reputation. But today we're talking about a fundamental step change. And again, it's not just us saying it. It's our partners at the University of Oxford who really brought the rigor to this and why we're so proud and confident of what we're sitting on here.